Yeah, I mean, you don't want to be responsible for somebody else's payroll and livelihood if you have no idea where your business is going.
I think I agree.
That's a really
That's
interesting.
big
I've
business.
never had that trigger point explained like that.
That's
That
a big
makes a
deal.
lot
What
of
she
sense.
just said too. When you go past the point of taking care of yourself, and you're going to have to start taking care of other folks, right? The stakes get high.
Hey, everybody, we're back again with another episode of
Big Talk
about
small business.
Small businesses. I'm here in the studio with my good buddy and partner in this affair, Eric Howerton. I was really hangry when I was coming in here. I had to stop and get an enormous chocolate chip cookie, or I would have really not been good today.
You know what's crazy is I was hangry too, but I got me like a sausage egg bagel, but you got a cookie.
I did, yeah.
Where did you get a cookie at?
Breakfast of champions.
Coffee shop,
right?
At the coffee shop.
Oh, you went next door and got you a chocolate chip cookie.
Yeah, I saw you in there talking to some old guy.
That's not good for you to get a chocolate chip cookie like that and just have that on your stomach.
That's my lunch, man. That's my breakfast and my lunch.
Mm-hmm.
So, hey,
power to you.
We've got a guest. We better introduce.
Yeah, right.
Danielle Hendon is with us. She is the founder of Corners CFO, which is a company that provides fractional CFO services to small businesses. She's based in Houston, which is the epicenter of everything, I guess. You got the biggest, Katy Freeway is always, whenever I think of Houston, I think of being on the Katy Freeway. 28 lanes.
28 lanes?
Yeah.
It's huge.
It
really?
It is a case study of build it and they will come.
And they come because there's traffic.
They come. It's the widest high, and every time they kept expanding it, just more traffic flows to it. So it doesn't solve the problem.
I've never even heard of this my entire life.
Well, Eric, you got to get out more, bud.
28 lanes.
Yep, that's right. 14 in either direction. and I'm sure Danielle wants to talk about that today instead of accounting.
Yeah, right.
Hey, Houston traffic could be a whole topic of its own because I live here and I will admit we are not the best drivers.
Oh, right. Yeah.
We're a little aggressive on the freeway.
But you are. You're an excellent driver. It's just everyone else,
I
right?
just stay off the freeway. That's why I work from home.
You're right. One of the companies I used to work for had an office in Houston, and their Houston partner would go through toll booths at 100 miles an hour. I mean, it was absolutely.
If you're doing the speed limit, you better be in the slow lane.
Regular occurrence. I mean, not like,
Yeah.
Anyway, I like that though. Things are moving fast down there.
Fast, man. Building it big.
Exactly. Getting stuff done.
Get it done. No slowing down.
No, not at all.
If you're in the way, if you're going slow, get out of the way.
Yes.
All those wonderful things about business, right?
So tell us a little bit about your business and how you got into this thing, Danielle.
Oh gosh, I love telling people that I actually started as a music major. I didn't think that I was going to be an accountant, but I had an English professor and we wrote an essay all about our career path. And I realized very quickly that I didn't have friends in high places and I was going to be really broke. So I decided that I did have friends in the business school and accounting sounded fun. And there's this weird connection between numbers and music.
Yeah.
And it fit. I've loved every bit of it. Hindsight 2020. My family and friends are like, I don't know why you didn't know that's what you were supposed to do. Did my master's, got my CPA, went the traditional route with public accounting, started a family and realized I didn't want to work 60-hour weeks with a newborn at home. So I left public, and being in Houston, I landed in oil and gas for about a decade. Where the company I was with ended up going through bankruptcy when all the prices tanked back in, what was that, 18? And anyways, prices tanked, bankruptcy, bankers were selling everything off. And it took about 2 years. But when the pandemic hit, it was really obvious the doors were going to close. And it was also a bit of a silver lining and perspective shift for me. We were in the process of hiring a nanny to get the kids to all the things, because that's what you do in corporate when you're climbing the ladder. And I was now at home with my kids trying to teach them and figure out who the teachers were and the friends and the parents and the coaches and all of these things. And I realized there was this whole other side of parenting that I was missing out on. And I didn't want to anymore. I wanted to find a way to do what I love, because, call me weird, I love what I do as an accountant, but also be there for my family and the people that I love. So I started Four Corners CFO in order to bring those big business concepts when it comes to budget and analytics and the things that make big business bigger to small businesses in a way that fits their budget, that's fractional, and also makes sense to them, so that they can use it and understand the story that their numbers are telling and build livelihoods and legacies. And honestly, it just feels really cool to get to be a pebble in the pond and watch the ripples of all the people we're helping.
That's a cool story. You know, I think that for our audience, let's demystify this fractional CFO if we can. Like, I mean, it's a term that's kind of...
It sounds really cool, doesn't it?
Yeah, no, it sounds so awesome. But what does it really mean to the small business owner, right? Why is that valuable?
A lot of people get confused because when you see, I am a CPA, and most people think accountant. And when you think accountant, you think taxes or you think bookkeeping. And what we do is actually not taxes or bookkeeping. We don't touch either. We focus on, as fractional CFOs, what would be more of that operational accounting perspective, where you're looking at building budgets and how do those budgets compare to your actuals, and what's the forward-looking future component of your business. Your bookkeepers, your tax preparers, they're really good tax strategy, which I hope all of you have, are usually looking hindsight. They're looking at the past, they're categorizing, and they're trying to do what they can to minimize the taxes for things you've already done. As a fractional CFO, it's our job to come in and help you understand the numbers so that you have the confidence and the peace of mind to take that next step in your business. As a business owner myself, you've always got that gut instinct, and a lot of people fly by it and they don't even look at the numbers and they just go by gut and they keep moving, and it can work for a while. It works until it doesn't. But we want you to have that gut instinct and then go, no, I can hire that person because the numbers say it's okay.
Sure.
So if we look at this, like if we said, okay, a CFO for a bigger company that can afford a CFO full-time, that's their job internally, is to do the budget planning, to set pricing's a big deal, I'm sure. Like, does it make sense? And payroll costs,
capital structure,
right? Is this business?
Borrowing,
all that stuff.
And exit planning. If you want to get out one day, you've got to know how to make sure that you can do that.
Exactly. So all that stuff is CFO territory, right? And so I think for a small business owner, like you mentioned too, Danielle, like that CFO doesn't mean they're preparing your taxes. It doesn't mean that they're doing your books. It means that they're a strategic part of the company that's looking at the numbers to make sure that this stuff all makes sense operationally. And then, but the fractional part, right, just for clarity, is for small businesses that cannot afford a full-time CFO to have that part. The fractional is representing that your business basically is doing a portion of that work for them. Or
yes,
you're on a part-time.
I would argue we do all of that work, but because they're a small business, they don't need a full-time person doing it. It can be done in a fraction of the time that a corporation might need, so we can serve multiple people. But at least for us, in the way that we do it, our clients have access to us I don't want to say 24/7 during business hours, but they have access to me and my team. If they've got questions, we do the coordinating with the bookkeeper and the tax preparer. We help them step out of that piece and know just enough of the finances to move forward, but not have to be in the weeds of it.
Yeah. Yeah. So they still, I'm sorry, Mark, I'm hijacking the show.
No, go ahead.
Okay. Well, I mean, every time I say something, you look like you're just pissed at me.
No, I'm not.
Okay. So if we were working with you, Danielle, we would still need a bookkeeper because you're not going to do that. And I still need my tax preparer for the end of the year. All right. Yep. So, because you just stay in that lane, but I think that's really important because I've been in small business for a long time and I never understood that. I would just hire a CPA as for taxes, and I think that they're supposed to help me with this strategy, and I'm so freaking frustrated because I'm like, Why didn't you say that 2 years ago?
Exactly.
If I'm losing so badly, why didn't you tell me to? Oh, well, I mean, it's never anybody's fault.
Yeah, I hear you. No.
And it's one of the first questions we ask new clients. We ask them to introduce us to their bookkeeper and their tax preparer. And then I say, do you have strategy meetings with your tax preparer? Because if not, we need to switch.
Yeah.
It's true.
Well, I think the other thing, the whole idea with the fractional CFO stuff too, is you could go hire somebody and call them a CFO, but you're not going to necessarily get the same quality. You want a full-time person at a price that's, or do you want a part of somebody who's better at the same price?
Mm-hmm.
It's kind of the way I look at it. I mean, I've done this role myself. I'm doing it right now in a company. Now, unfortunately, I don't know what your experience has been, Danielle, but don't you find that sometimes you can't really do the CFO job because the accounting is so bad that it forces you into the weeds? And that's certainly what I've encountered. Things like revenue recognition.
Weeds.
Yeah.
We get a lot of back and forth with the bookkeepers to make sure that the numbers are good, but we go through a very structured framework when we onboard a new client. The very first thing we do is their balance sheet, because if I can't, as an accountant, reconcile your balance sheet, and for those of you listening, that is not the same as QuickBooks saying it's reconciled. If it doesn't make sense and it's not reconciled properly, that's the first place we have to start. I'm not going to touch your P&L with a 10-foot pole.
I like that.
Why is that? Explain it to us folks that don't understand all this stuff, please.
So the easiest one to give is your bank account. And I'm dating myself a little bit. It's kind of like balancing a checkbook back in the day of like, you may have money in the bank that you've already spent. And that's the purpose of a reconciliation between the books and the bank account. And QuickBooks will do that. It'll match. It'll look for what's different. And then it gives you this list of outstanding items. A really good bookkeeper is going to make sure that list of outstanding items makes sense, that you don't have a check from 2 years ago sitting in that list. A not so good bookkeeper is going to say, oh, they're reconciled, numbers match, you've got this list, we're great, let's keep going. And we're going to say, time out, we got to back up. What is this? Another really good example that I love to give is the balance sheet is a place where a lot of accountants will put what we call clearing accounts. So something that just needs like a placeholder. Payroll is a great example. If you have people on payroll and you're doing 401k payments, and as part of their payroll, they're contributing to the 401k, that's going to go sit in a clearing account because it hasn't actually been paid out to the 401k company yet. It hasn't hit your cash. But people will use that clearing account incorrectly, and it'll steadily grow and grow and grow. And I'm like, wait, where's the offset? Something got booked wrong here.
How about inventories? I mean, I got involved with a company, and a couple of years ago, I looked at their balance sheets, and they had the same value for 2 different inventory accounts over 3 years. Okay, now that's a red flag, isn't it? It's like, what are the odds of that? Because the inventory
assets that have never recorded depreciation because the bookkeeper and the tax preparer didn't talk.
Yeah, I mean, so yeah, the inventories I find are a big problem. The work in progress. I mean, I'm sure a lot of these little companies, you work with professional services firms, I noticed.
I was going to say, I'll be honest, we avoid the inventory unless they're a trade that has very small amounts of it that we can be like, I don't really care so much about that.
But you still have unbilled WIP.
You do. You have a lot of unbilled time.
Yeah, that unbilled work in progress. So you're a service firm, you do the work, but you haven't sent a bill out yet.
Yeah,
that's really an asset. You can't
begin to talk unbilled and accruals if you haven't walked them through actually cleaning up the books first. If they're not billing well to begin with, and we do a lot of law firms. One of my favorite examples in a law firm, you have what they call a trust account, which is basically like the escrow, the retainers. You haven't actually earned it yet. Law firms love them, but they can be notorious for moving money because they know they've earned it, but they didn't actually take the time to go put it in their practice management system. And now the books are a total mess and nothing ties.
That makes a lot of sense.
But until I clean that up, we can't begin to talk about your unbilled. I need to fix your billed first.
Yeah. So there's a lot of problems. How do you explain to these small business owners the difference in things like cash and accrual? Because I've found that's very difficult for some people to understand. even though you can tell them, look, cash is like your checkbook, what came in and what goes out, and accrual is when you earned it. But it's like a lot of small business owners just simply cannot understand accrual. Do you find that to be the case, and how do you help them?
Absolutely the case. And my initial gut answer to you is I don't explain it. But second to that is we talk about it in different ways. I don't talk about cash.
Sorry.
That was an awesome answer.
We don't, because similarly, I don't talk about cost of goods sold. I talk about revenue generating costs. I want it to be in language that they understand and recognize. So I'm not going to say cash versus accrual because that doesn't mean anything. But what does make sense, and I'm going to use law firms again as the example.
Sure.
When you get paid, it hits your bank account. And we're going to have a cash forecast that's going to show you when we think things are going to hit your bank account. And it's going to be based on your budget. But your budget needs to show me what's happening in real time, because if your team, and back to your unbilled piece, if your team put in 100 hours and we think there's only, I don't know, $20,000 of revenue or whatever, if it's not hitting the target that 100 hours should, we need to have a conversation. But if I don't know how much actual time and actual revenue, and we don't have that revenue matching component in the same month, we can't begin to have that conversation. And that's why we need to book these accruals.
Yeah, I'm glad you brought up cash flow forecasting. I mean, so I know you specialize in these companies that do like less than $1 million a year or whatever, right?
Usually we have a couple that are up in 10 and 15, but not very many.
Okay, so whatever, let's even say 10 or 15 million. How many of these companies, when you go to help them the first time, have you found that have any kind of cash flow forecasting whatsoever?
They don't usually even have a budget, let alone a cash flow forecast.
There you go. So, I mean, I don't know what your experience is, but I'm just going to go back to my own working as a fractional CFO in a company I also happen to have some ownership in. The cash flow forecasting was non-existent. We update it throughout the day, every single day, and it's the most critical tool that we have. I don't know what else to say other than my experience is at most all these small companies, they don't do it, and I don't understand why. Is it because they've got so much?
Need it at that level? Like I will be honest, we don't do daily cash flow for any of our clients. We have a couple of those larger ones that we're looking at it weekly to make sure that payroll and billing goes out on time.
Right.
But the majority, if you're in that kind of 250 to $1 million space, we're usually doing it monthly. But you need to know when you expect that. Cash is king. If you run out of cash, you don't have a solution for it. I mean, and one of the very first things I tell clients is I'm a huge fan of a line of credit. You need to have a safety net. And if it's not your own savings, then we need to find one. But you don't want to always be reaching into that. And if you don't know where cash is going to go, we've got big problems.
You know what I love?
What's that?
I love being the dumbest person in the room.
Oh, come on.
No, I mean, for real. You guys are going back and forth. I mean, talking about all these things that are just like scientists.
Yeah.
But I'm here to represent our listeners out here today because, like you brought up the cash flow. Like, why don't they have that?
Are you going to ask us what a cash flow forecast is?
No, I'm not. I'm not going to ask that, but I'm going to say, hey, the reason I didn't have that, and the only thing that was in my brain as an entrepreneur was nothing other than making a deal.
Getting revenue.
Getting a sale.
You checked your bank account. I bet you looked at your bank account at least once a week, if not every day.
He managed his cash very, very tight. He was super undercapitalized, for a long time. And that teaches you to be.
I was going to say, even my clients without a budget are at least checking their bank account. Like if it's in the bank, I've got it. May not always be true, but at least they're looking.
I'm telling you, man, I'm the worst. Like I am the worst candidate. I really am.
Why don't you have me helping your business?
Because you will. I'm embarrassed, and I'm scared.
Get Danielle.
Okay, well, that is a very real thing, though.
Okay,
people would rather stick their head in the sand,
and
fly by gut, than feel embarrassed or ashamed of what their numbers are.
Yeah,
there
exactly
is
right.
absolutely a huge mindset piece.
That's exactly
There's
right.
nothing to be embarrassed or ashamed. I mean,
listen,
there really isn't.
No.
To accountants that enjoy this, it's like putting together a puzzle. Yep. What you see as messy and embarrassing, we're like, oh, this is so much value we can add. If I do this, I can do these 2 little things and you're going to see so much.
So here's my thing, though. I mean, I think this is a good combo because the reality is no, I don't look at my bank account. Mm-hmm. I don't look at the books. As a matter of fact, my entire time at my previous company that we built, I never looked at the books. I never looked at the bank account. I had no idea.
God love you.
I would go
gauge how the business is doing.
How's the business doing?
Yeah.
That one ended up doing pretty good.
No, I mean, but how did you gauge it? How do you measure it? How did you gut check, pulse check, feel for?
Making deals, man. Just making deals. If I would sign another deal, then I would go back and we would hire somebody, and I just understand that people are out of capacity and can we hire? And so to answer, I had a business partner. My business partners would always be on that side.
Somebody's looking at it.
Yeah, but I was never looking at it.
Well, when you had though all by yourself before you brought that business partner in, what you were doing is you're going, oh, I don't have enough money, therefore I'm not going to take anything out, or I'm going to kick money into this thing. Right?
100%. I'd self-sacrifice.
Yeah, total
utter self-sacrifice.
You were looking at it.
And then just getting on the phone, calling, meeting. It's all about revenue. But I mean, I think that's a statement.
But it's not all about revenue, and you could have lived life easier.
Oh, I'm sure I could have.
I mean, I think too, though, a lot of it depends on like how capitalized the company is. Because I've also, as you say, professional service firms, I worked with architects and engineers my entire career.
Yep.
And that's a long one. And I remember there were like an architect in Connecticut who had his entire revenue he needed for the year in cash in the bank. He's like a 70-year-old dude. Okay. That guy didn't care about his accounting at all. It's like they'd send bills out every 3 months if they felt like it, because they just were so overcapitalized. Yeah, they were just flat out overcapitalized. And it just takes all the... I'm used to operating on the other basis, like payroll's Thursday. How much money have we got? Where can I get another 20 grand? I mean, it's a different thing. I think when you've got a really undercapitalized company, the financial management stuff that you're talking about doing, it gets even more critical it's done.
It's really fun when they've got a lot of cash, because then we get to connect them with wealth manager, and it becomes like, okay, so let's figure out how to make this tax efficient. And do we want to go buy real estate for the office instead of renting? And how do we make more money for you out of this, not just sitting in a bank account doing nothing? Because I'm a huge proponent of emergency funds and line of credits and having safety nets, but sitting there doing nothing, no thank you.
It's crazy. It really is. I mean, do you find that a lot of small business owners are resistant to take money out of their business and, let's say, put it in the stock market or other things that maybe are considered safer because they feel like they don't have control over it like they do their own business?
Absolutely. And I think part of it is that a lot of small businesses, we know we can budget and forecast all we want, but if the world has shown us anything in the last 5 years since I started this, it's that you're going to get hit with something you never saw coming every year. Yeah. And I think there's that, what if we get hit with this thing and then we lose clients, or we need money, and they want to make sure that it's still there. But I think that's why it's important when we have that emergency fund conversation to say, okay, let's put that somewhere safe. When we're beyond a 3 to 6 month emergency fund, and when I say that, I don't mean all of your money, because let's be real, if your business is tanking, you're not keeping all of your people. But a 3 to 6 month emergency fund, then we really want to say, what makes this cash effective and efficient for you? How do we put it in a place that doesn't just benefit the business, but benefits you?
So your emergency fund is 3 to 6 months of what, like the total overall operating cost of the business?
We go through an exercise with our clients where we actually talk about, if all hell break loose.
Yeah.
What do you absolutely need to keep this business running? What keeps the lights on? If it's a revenue generating cost and they're not generating revenue, are you really still keeping them? So that we can come down to what's a realistic number, along with, we all know it costs money to hire people. How long would you want to keep somebody and give you time to pivot and adapt before you say, okay, we're going to have to do some layoffs? Because as a business owner, that's one of the last things we all want to do. You know, you're responsible for other people's livelihoods, and that feels like crud to do a layoff. But if they're not generating revenue, then we can't keep paying them.
Yeah. Yeah. How do you feel about open book management? Do you ever advocate that or put that in place in some of the companies that you work with?
Oh, I haven't heard of that.
Okay, that's basically sharing firm financial performance metrics with every single employee in the company. Like one of the companies I work with, we share everything. Yep. Cash accrual, how much cash is in the bank, sales, web hits, all that stuff. How do you feel about that?
I think there is a ramp up to it. I think for a lot of the businesses that come to us when they're first starting out and don't have budgets or they don't even have KPIs. Our first step is to identify those KPIs and figure out who's responsible for them. Because all of those primarily administrative, non-revenue generating people should be revenue affiliated and have a KPI. And they need to know what that is first. And we want to make sure we're incentivizing it. They know what it is and they've got access to what that number is. As you grow, I definitely think that open book management helps the firm as a whole come together and build a better team and build a better firm and have a really great culture. But I think you have to lead up to it. Otherwise, it's information overload. I have clients that'll get on and I'll open Excel and I just watch them go blank.
Mm-hmm. So I love that she said revenue affiliation. Is that what you said? Did I catch that right?
I'm telling you, I'm all about the non-accounting terms. If you hear me say an accounting term, it'll be really rare.
So it's like what you're saying is you got to justify your existence here some way. It's basically what revenue affiliation is.
There is nobody on the payroll or in your operating expenses that is not either required, revenue generating, a personal perk like my kids on payroll, or an investment in the business. And everybody and everything that's an investment needs to return time, money, or both.
Yeah, I agree. I like that. How do you get people to think like that, though?
So when we go through the onboarding process to their budget building, step 1 is the balance sheet. Step 2 is revenue streams. We look at most of our clients come to us with a single sales line, and nobody does one thing. If it's by price, format, or location, or type of service, we want to know what those revenue streams are in a way that makes sense to the business owner. The end goal of the revenue section is to understand the true profit margins, not your 100% service provider thought profit margin. And what is that profit margin by product or service? Then we get into expenses and we're looking at all of those operating expenses. And we literally will go through, my team will go look up who's the vendors for all of these things. Is it a required cost for your business? Is it what we think is either a passion project like charitable contributions or a personal perk like kids on payroll that's really more of an owner's comp that you get to run through the business? And then everything else, we sit down with them in that meeting and we say, this is an investment. What is it returning in time, money, or both? And we start to get the business owner thinking about what are those KPIs? How is it giving back to my business? What are all these shiny object bolt-on systems or people that we have added over time that aren't necessarily adding value?
Or people we're protecting that we had for 20 years working for us.
Yep.
That's another one. So anyway, I did have one other thought, and then I'm going to let I'll turn the interrogation back over to Eric. So how do you deal, let me rephrase it. A lot of accountants I've dealt with don't seem to understand that my goal as an entrepreneur has always been to build value in my business and have a big exit, whereas they seem like they're preoccupied with short-term profitability. And the two are definitely in conflict. I mean, I can just, I've told it on the show before. I mean, I remember a story after we were in business, like probably, 6 or 7 years, and our accountant says to us, me and my business partner, that, well, you could have each taken out another two get 250,000 out of this company this year. And we're like, Bob, you've got a 4-person company. Okay. You don't understand what we're trying to do here. We're trying to grow this thing and sell it to private equity, which we did. How do you deal with that? I mean, do you find that most small business owners are more concerned about their short-term profitability, or they want to have a big exit, or do they expect to do both, realizing they may be in conflict?
It's a mix. And one of our earlier meetings with new clients is always going to focus on what their goal is. I want to know, is your goal, because some of the clients, and I've heard you talk about this on other podcasts, but some clients come into this and they're like, I want to get more time back. And I get that. We all go into this thinking we're going to have this really cushy lifestyle job, and then we're working 80 hours when we thought it'd be 20. But it's not impossible to get some of that time back. But to do that, you have to create operational efficiency, and you've got to buy that time back with people. And that's where we start creating that exit plan. So I'll give you a couple of examples with real clients. We've got one of our larger firms is actually in the conversation of, how do we add value? We don't want to just take all this money out. Their emergency fund needs to be like $1 million, and that I'm sure should not be sitting in a 0% interest bank account. How are we adding value to this firm? And we're talking about real estate and offices and how to do things that sit on the balance sheet, not just the P&L, but also create a more effective tax strategy for them, because then they can leverage the rent strategies and the real estate tax stuff. Versus another one of my clients that's been with me. He was one of my very first clients. He's an engineer, does a lot of outsourcing, and does it as his second career. And I'm like, look, you don't want this to be nothing at the end. So we have to start talking about, how do you find a mini me? How do you find somebody that might be interested in this down the road? How do you start to train somebody and get them involved in the relationships? Because right now you are the business, and you can't sell that if you want to get out. So those types of conversations versus I've got another attorney that's a small firm who finally found her mini me, and she's getting her time back. And we're in that place of, okay, now where do we create operational efficiency so that we can exponentially scale this?
Yeah. Yeah. That's where you really start getting into what I would just call really almost classic management consulting, as opposed to just financial.
And there's a little bit, I mean, I'm sure you experience it too. When you're a CFO, there's almost as much management coaching, consulting, goal setting, and we're just putting it into numbers.
Sure. Yeah, I find that unfortunately a lot of professionals, which is what you're working with, regardless of what their discipline is, they feel like I don't know if it's beneath them, or it's just too boring, or they don't have an interest in it, but they just don't pay attention to the numbers. They pay attention to selling and client service and the doing of whatever the place does.
That's why we get to exist, because we love the numbers. I have some clients, we'll get on those calls and I won't even bring up the financials. We'll start with talking about what's giving them heartburn right now. And because I know the financials, we can talk through whatever that is.
I mean, that was kind of what I was bitching about earlier. Yeah. A little bit. But I mean, excuse my language, Danielle. Sorry. Mark requires me to cuss on this show. I personally don't use any profanity, but Mark said if we're going to do a show together,
the requirements.
Yeah. So I've changed.
Such a lie.
Hey, it makes us all human, right?
I guess so. I mean, I am who I am now.
Well, listen, I happen to have read that people who curse more are actually more intelligent.
Oh, that's cool.
Anyway, I'm going to go stake my...
That's why I'm cussing now, right there, that peer pressure. But I mean, to your point though, like here, this is my thought, and I want to bring some comfort because to any entrepreneurs out there, because my thought process is to answer your question. I'm in the business for marketing. I can see the things, a problem that needs to be fixed. I'm trying to articulate that value to clients all the time. I spend all my time, my waking moments, trying to find a value statement that simplifies what the hell it is that I'm talking about, this complex thing, so that somebody else can understand it, building graphics and sites and marketing programs to communicate, sales and meetings and drinking coffees and all this crap. The last thing on the planet Earth that I have any kind of attention and time for are all these numbers with all these, all these different reports and all these different things. It becomes this whole other thing that I want to depend on somebody else to
But I
make
bet
it
you
happen.
would care if I came to a meeting and I said, hey, you were expecting to make $100,000 in revenue this month, but your team only performed at 80% and we came in 20% short of that.
Oh, I would
because
totally
now you need to have
care.
a conversation with the team and figure out, are we using the right tools? Do we have the right people? Do we have the right processes?
No, I totally care about that. I just don't want to be the one that has to figure it out. Yeah, I just want it done.
But don't you find
I'm doing my job?
Okay.
Why can't everyone else do theirs?
I will be honest, I would bet you out of all of our clients, maybe 10% actually open their CFO reports that we send. They want to have a conversation. I bet they're not. And if they do look, they're looking at the graphs and not the numbers.
So I'm kind of I am part of basically your clientele.
Because you don't want to be in the weeds. So we get in the weeds for you.
Yeah, I want everything done for me.
Danielle. But don't you think, I guess I'm having a little bit of a problem with that. I'm starting to understand maybe why you struggled for so long.
And I'm still struggling.
Before you made the big bucks. Because I think if you're not really tuned in as a small business owner to your numbers, I always advocate to my students, don't give up your bookkeeping until you're at a certain level. For me, it was like $1.5 million or $2 million a year. I wanted to see every dime coming in and going out. And it gave me a much better sense of the business than if I had just delegated that to
you're
Susan.
Funny, because it's the first thing I tell everybody to get rid of.
What's that?
I'm like, go find a bookkeeper. I don't care who you are, when you started, what level you're at. Go find a bookkeeper.
Okay, well, I'm just telling you that my experience was that I've always had these undercapitalized bootstrap companies.
Yep.
And so I just had to be that close to the numbers to develop a sense of it. We used to even say to people, like, you should always open your mail. You remember this?
Yep.
I'm sure, don't you? It's like one of the fraud prevention measures is the business owner opens all mail.
Yeah.
Because there's so many ways people can steal from you with fake invoices and stuff like that. But it's sort of analogous to that, I guess, to looking at keeping the books and signing the checks. At least sign the checks, right? Would you say that, Danielle?
Yes. You need to know every check going out the door.
Okay. Well, maybe that's
so I know that. I approve all of that kind of stuff. But I guess my thing is I recognize and appreciate and 100% value the significance and importance of it. I just don't have the capacity for it.
That's why you hire.
I was going to say, that's what CFOs are for.
Now, didn't I just do a fantastic job of setting that up so that we have more sales and marketing for Danielle?
Exactly.
That's what I do. I need Danielle to do numbers for me.
Your bookkeepers are going to ask you a million questions. And let's be honest, they do. And when I talk to the bookkeepers, because we don't do bookkeeping, coming from an audit background, I'm all about the segregation of duties. I was like, you need as many eyes on your financials as you can get. And honestly, I actually prefer when your bookkeeper and your tax preparer are completely separate, because then everybody can ask questions. And that's important.
On that real quick, Danielle, so what I like about that is so would you recommend you have a bookkeeper, you have the CFO, fractional CFO, you have a tax preparer, and an auditor, 4 totally different folks in different companies?
If you are at a point where you need audit, yes. I would say a lot of our clients are not at that perspective. And as a fractional CFO, we usually, if it's just small bank stuff and just reporting, we usually step in for bank covenants.
Yeah, you probably just do mostly compilations. I don't even know if you do many. Well, you're not in the.
I don't even do compilations because we're not
do compilations. So forget that. That's what their outside bookkeepers or accountants would do for them.
Yep.
So yeah, I think too. Just step back for a minute on the CFO role. We're kind of focused in some of the nitty gritty stuff here. I think a lot of people don't really appreciate maybe broader concepts such as a good CFO is going to help you minimize the capital investment it takes to run your company.
Mm-hmm.
Okay, now that's a really core idea. You generates the less you have invested in it, then your percentage return goes up, right? You can use the money somewhere else. A lot of companies are overfunded and they really drive down their return on invested capital because they just have too much sitting there. That's going to encourage you to do things like improve your cash flow. That's going to be a really big deal. Speeding up billing, speeding up collection. Those are things that improve cash flow, take less capital. Looking at things as Danielle said, like utilizations of individual employees and how chargeable they are versus their billing rate, which really, that's the other side of it, I think, Danielle.
And their collection rates.
And their what's actually realized.
Yep.
You work with these professional service firms. My experience is they're preoccupied with how chargeable somebody is. But it doesn't mean that it's going to get billed to a client. Number one, they could be chargeable to an over budget job.
And you discount it.
Yeah. And so it's not the whole measurement of what they do.
So what we do, and I love this because it gives the business owners a really clear perspective when we're going through that revenue process with a service provider, we create a budget based on capacity. So I want to know what is their billable rate and how many hours should they be doing billable work? Because let's be honest, we've all got admin time. So if you should be doing billable work 30 hours out of the week and you've got a $350 an hour rate, I don't care if it's flat fee, contingency,
Amen.
With any of it, that's what's going in the budget. And if we're not hitting it, we have a problem we need to solve.
It's how much revenue you're generating. So I call that the revenue factor. It's really your labor cost to your revenue, total labor cost for an individual. But it's exactly what you're saying. And so, yeah, I think, but these sort of bad habits have been like programmed into them. Mm-hmm. Well, that's the way we did it at this old law firm that I worked at.
All about billable hours.
Yeah, it's all about billable hours, period.
But the really easy way to make sense of it is if you've got let's say a $2,000 flat fee that you thought was going to take somebody 5 hours and it's taking them 10, don't you need to know that? Because you could have billed them out at $350 for a whole lot better than that.
Yeah. So anyway, though, the CFO, they're going to help you with your banking relationships. That's a big deal. And help maximize the amount of credit you can get. Do you do a lot of that? You mentioned lines of credit. You want your clients to get them while you don't need them, obviously, yes. Right?
Even though the interest rates are not great right now, get them while you don't need them, negotiate them again later.
Sure. Do you find a lot of clients in these small businesses don't understand that there are covenants tied to these lines of credit that they've got to maintain?
Oh, almost none of them do. But I will say, before we go too deep into it, we are not huge on like the funding and the private equity and the banking side. We do a lot more of the operational side. We have some partners that we work with that are really great in that space if they need additional help on the banking and capital aspect of it. We're more in the managing and making sure that we can go get all the right things in place.
Right. What about like compliance related stuff and forms that have to be filled out? Do you guys get involved in that at all for these companies, or?
Depends on the fiduciary responsibility of the form.
A lot of times small business owners, as you well know, like anything that doesn't fall in the domain that they like lands on the desk of whoever it is that's in charge of financial stuff.
But that's what a really great referral network's for. Because then I'm like, here's a great attorney that can help you with that one. Or here's a great CPA that can do that piece of it. Or because like I said, we do not operate as a CPA firm. So by all technicality, we can't officially file anything for anyone.
Yeah, well, I mean, maybe not officially filing, but filling all this stuff out.
And we do help with a lot of that when it comes to bank forms and lending, and they want this report and that report and these forecasts and all the things. We absolutely jump in and help with those pieces.
Yeah, like an insurance audit or something. They don't know how to deal with going through the payroll and putting all these stuff and fighting the insurance company that suddenly gives you a bill and says you owe me $12,000 more. Right?
Those are fun. That's where I would go, hey, do we have a payroll person yet? We might want to, or an HR. We need to consider an HR person.
Ready to level up your show? At podcastvideos.com, we offer industry-leading recording and expert marketing to help your show reach more listeners. From creation to distribution, we've got you covered. Visit podcastvideos.com and elevate your podcast today.
Hey, Danielle, with the last kind of question on my end before we get going, unfortunately, we're already almost out of town. I'm sure y'all didn't know. I was going to say, I bet y'all didn't even notice that time was going by.
We could talk numbers all day.
We might just clip me out of this entire show
today.
You know, I mean, I provided no value.
No, you're one of the most important pieces.
You're the archetypal client. And
that's the other thing about my side is that I need a lot of emotional support.
Well, you're eye candy.
Okay, I'm good at that.
But you're the eye candy. You're definitely the eye candy.
Oh, Lord, you are funny.
But how does a small business let's take two small businesses, really. You got your brand new entrepreneur, we talk about this a lot, never done a business before in their life. Mm-hmm. They have an idea, they're about to quit their job, their professional job. What is the first thing that they need to do? And when do they need to do it? Do they need to do it before they quit the job or when they start, or when they do start? What is your advice as a fractional CFO?
Calculate your runway, and you do it before you quit. You got to know what the runway is, and you've got to know if it's feasible. And I say this from experience. I got let go from my job. I knew that, not going to lie, we had a nest egg. I knew we had this nest egg. I knew it was going to last for this long, and I had this much time to make this work, or to go back and get another one. You have to have a runway. Somebody's got to pay the bills. You can't lose your mortgage while trying to set up your business. You've got to know what your runway is. And to know what your runway is, you've got to know either what your capital or your nest egg is. And you've got to know what those minimum required expenses are for you to get off the ground.
That's good.
I never had that luxury.
Yeah, I didn't either, but I wish I would.
I will say, Danielle, that my experience, I mean, I don't disagree with you. I think most people would certainly benefit by thinking about all those things and reducing their personal overhead to the lowest possible point they can, right? So they don't have to take more out of the business than necessary to live. But my theory is that when you're vastly undercapitalized and you start a business, it actually makes you a better business later because you're going to be so concerned about your cash flow and basically every dime that it builds a discipline in that, you know, when you're like Eric and you sell your company and you have all this cash sitting there and then you start starting up all these other businesses and your survival is not threatened.
And when I say nest egg, I don't necessarily mean when we're talking runway, it's not necessarily that you've got this giant saving. We're not Eric with millions over here in the bank.
Danielle's in on this joke. Danielle got it on the joke.
I will tell you, I have clients that come to us in that phase and they know they've got $20,000 on their credit card. And how long will that last you to get going? That you then have to pay. Yeah. If that is your runway, that's your runway. You've got to know where it gets you. The bills have to get paid one way or another. You're not going to get kicked out of your house. Your runway may be your credit card. Your runway may be a relationship with the credit union down the street that's willing to give you $20,000 to try and get this going. It's not a huge nest egg. And I promise you, getting laid off from oil and gas was not a huge nest egg, but it was enough to say, I've got X amount of months. And if I get my shit together, we're going to go. And if I don't, then I got to suck it up and go back.
I think a lot of people underappreciate
solid.
It is solid. Suck it up and get on with it. I think a lot of people underappreciate the power of the runway via credit card.
Yeah.
Especially like
not my favorite example, but it is usually the go-to. Let's be honest.
Especially like the Walmart credit card and the Banana Republic credit card.
When you go rotate to and
I mean, like you buy stuff like you buy your groceries on credit cards and then your clothes.
And if you're a professional service, the other option is you may be coming with a book of business. You may know you have people coming with you. Yeah. And that helps too.
Yep. No, for sure.
Yeah. I mean, I think that's all solid. You were going to say, though, so what's the difference in the new company versus, I think, your original question?
Yeah. So the second part to that, so that was for the new person, right? But then you also have somebody that has started. They've been doing bookkeeping. When is really, I mean, you'd probably say before, but when is it really the appropriate time to bring in that fractional CFO? Like, I mean, go ahead and answer that.
From an operational perspective, because most of you aren't looking at numbers anyway, it's when you're looking to hire that mini-me, when you're like, all right, I've got to stop being the only doer in this business. I've hit capacity. I need to start building a real business. Okay. And I need a mini-me. I need another doer. I need a revenue generating person. Hiring a fractional CFO is going to help you build the budget and the scenarios of what that looks like. We jump in and help set up what can we afford for compensation. What is their affiliation to revenue? What do we want to incentivize versus work being paid on salary? How do we want to set this up so that it maximizes your return?
So what that tells me is like, okay, if you're an entrepreneur and you want to be a solopreneur.
Yeah, I don't like that term. You know that. But
I know, but you may not necessarily want to, I don't think the caution of not having a fractional CFO is too great. But if you're trying to grow a business, and you're trying to actually, what I'm saying, get
that's
small business. That's
yeah.
the entrepreneur.
You're shifting from small business owner into entrepreneur.
You started the company, you have a runway like we talked about, you have built some clients. Now you need to start growing. You got to start scaling yourself.
Yep.
That's the trigger point of when, hey, Danielle, listen, I heard you on the greatest business video podcast on planet Earth called Big Talk About Small Business.
I'm the
with this sexy man named Mark Zweig. Like this beautiful specimen of a man. I shouldn't say that. Okay. Sorry about that. But yeah, that's the trigger time to call. Is to start talking, right?
Yeah, I mean, you don't want to be responsible for somebody else's payroll and livelihood if you have no idea where your business is going.
I think I agree.
That's a really interesting. I've never had that trigger point explained like that.
That's a big deal. What she just said too. When you go past the point of taking care of yourself, and you're going to have to start taking care of other folks, right? The stakes get high.
Yeah.
Well, it starts. I think another way to look at it is just you decide that you want to be an entrepreneurial venture instead of a small business.
Yeah.
That's going to remain permanently small. Is only tied to you and what you do, basically, and everybody else is just.
Let's be honest, it's not a sellable venture. You're going to do a business that pays the bills, and then you're done.
But the problem, I mean, we all know that, right? There's no question to any of us that that's a true statement. But the problem what I found with a lot of these small business owners is they strip the money out of it year after year after year. They don't hire anybody who's any good. They don't train them in the business itself. And then at the end, they still want to get a payoff. It's like, I'm 70. I don't have anybody good. It's going to take over, though. I was going to give it to my kid, and she don't seem to want it.
Kids have already told me they want nothing to do with accounting.
Exactly. And so now I need you to go sell my business. Okay, well, what are you selling? You've got nothing.
It's you can't sell yourself.
Yeah, you didn't invest in
that doesn't mean you can't go there. Like I said, we've got the one engineer, and I adore him, and he's looking, and I think we might have found somebody that would be interested in bolting on as a partner and then assuming the business and buying him out, which is a great way to go if that's what you're in. It's not impossible to get there, but it's a lot easier to build a scalable business from the start.
That's right. Yeah.
And that's not going to maximize your value. It's an exit. No,
but it does give you an exit.
It's an exit. Yeah. It's absolutely, that is true. There are people who will, I call those just basically takeover payment situations where you have some employment income and your employees, if you got 3 of them, or they're not going to get canned, and your clients are going to be able to, you care about your clients. Mm-hmm. You've got a way to take care of them when you're not there. Right.
Yep.
But there's got to be a value to the buyer. Like, what am I actually buying? Am I buying more clients? Am I buying a process?
They're getting some people and they're getting some clients.
Yeah. Or maybe they're adding on to a new vertical.
They're getting some relationships.
Yeah. Mm-hmm. Maybe they get a service, like you said, that they didn't have.
Yeah.
They're electrical engineers and mechanical, but they didn't do plumbing. This guy's plumbing.
But the problem, like you said, like a lot of times in the small business owners, like they're exhausted. They just want somebody to help get them out of their situation. And they've worked their butts off to get to that point. And they see so much value in what they built, but nobody else really does.
Yeah. It's true.
I mean, I don't want to say this, but I mean, it is kind of like when I was back in the real estate game and I was doing loans for folks, and people would come in and say, hey, I have this property that I'm wanting to buy. And is there a home on it? Yes. Well, what's the home? Well, it's a manufactured home. And we'd be like, we can't lend.
We can't finance that.
We can't finance that. And they'd be like, well, but it has a deck and a pool to it. I'm like, that doesn't matter.
Yeah.
It might be really nice, but the reality to it is it's still a manufactured home.
Yep.
It's kind of the same thing. It's like you can't have a solopreneur business and expect that you're going to get bought out like you have some sort of scalable thing for somebody.
And to that point, if you have a solopreneur business and you are taking it all out, you better have a really great wealth manager that's helping you put it in a good place.
Yes, very true. All right. Well, if anybody out there wants to get a hold of Danielle, who makes a lot of sense, by the way.
Yeah.
How do they reach you, Danielle?
We're going to set up a landing page just for you guys. So it'll be on our website, the number 4, not the word, cornerscfo.com. And then it'll be Big Talk Small Business.
Oh, wow. All right.
Thank you.
Thanks. And she's just trying to actually document anybody
for the value of our show.
Calls.
Sounds like a CFO got behind
She's
this.
covering. She knows what she's doing over there.
So the number 4 corners
with an S, CFO.
Corners CFO.com /
Big Talk Small Business.
Big Talk Small Business.
All right.
We cut out great. It was a lot of words.
And what's your email address, Danielle?
It's going to be my name, Danielle, at 4cornerscfo.com. Again, the number, not the word.
Okay, very good. Well, that's great. Well, listen, we really appreciate your being on the show and wasting your time like a couple of times.
It is never a waste of time. If anybody listens to this and we just get a little bit of like, ooh, maybe I need to go look at my numbers and not be like Eric, then this was a win.
Yeah. That's a good boy. She just jumps right in, man. She gets it. I'm telling you, she gets it. No, you're right. I mean, I think there's a lot of lessons here, whether somebody actually hires Danielle to do this or not, that are really critical for people to listen to.
Yeah, I agree.
So
it's been awesome. I learned a lot, Danielle. Thank you.
Thanks, Danielle. Take care.
You too. Thanks for having me.
And now you can join in on our what is it? Our final salvo here.
Yes.
This has been another episode of
Big Talk
about Small Business.
Oh, I went too fast.
No, you did it perfectly. Everyone's supposed to do it their own way.
Yeah. All right. Thanks, everybody.
Thank you, Danielle.
Thanks for tuning into this episode of Big Talk About Small Business. If you have any questions or ideas for upcoming shows, be sure to head over to our website, www.bigtalkaboutsmallbusiness.com, and click on the Ask the Host button for the chance to have your questions answered on the show. Stay connected with us on LinkedIn at Big Talk About Small Business. And be sure to head over to our website to read articles, browse episodes, and ask questions about upcoming shows.